So get this. My AI portfolio is up over 11,000 pounds just this quarter. But, and this is a big but, that entire gain could literally disappear in the next 10 days. Yeah, a massive earnings storm is coming for some of the biggest names in tech, and that's exactly what we're diving into right now.
Okay, so here's the number. Year to date, a gain of 14.17%. I mean, it's been an absolutely fantastic run, right? Fueled almost entirely by this AI boom. But, and this is the crucial part, that performance, it's on a total knife's edge. And look, I need to be crystal clear here. This is not a flex at all. This is a warning. Seriously, if you hold Nvidia, AMD, Palantir, or SoFi, you've got to understand that this earnings season is a potential minefield. So in this breakdown, I'm going to walk you through exactly how I'm trying to navigate it. All right, so to really get the strategy, you first have to understand the stakes. So let's pull back the curtain. This is a look inside my personal, very high-stakes AI portfolio. The total value right now, it's sitting at just over 92,000 pounds. So you see, this isn't some abstract percentage gain we're talking about. This is real money on the line, which of course means the risk is very, very real too. And here, oh boy, you can see the concentration risk clear as day. 65%. 65% of the entire portfolio is tied up in just 5 companies. I mean, that is the literal definition of putting all your eggs in one very specific AI-powered basket. And believe it or not, it gets even more extreme. We're talking 100% exposure to the AI and tech sector. There's no diversification here. No energy, no healthcare, no consumer staples. Nope. This is an all-in bet on this one technological revolution. And this quote, it just perfectly captures the reality of this strategy. It's the classic high-risk, high-reward play. When the AI sector booms, I fly. But when it corrects, I bleed. And it can bleed value fast. Okay, let's get to the core of it. Let's see how this all breaks down. Because we're about to deconstruct the big 4 stocks that are going to define the next few weeks, not just for me, but possibly for you too. First up, the absolute dominator, Nvidia. Now, the bull case here is still incredibly strong. And what's really crucial is that its forward PE ratio, its price relative to future earnings, it's actually dropping from a lofty 53 down to a much more reasonable 33. So what does that tell you? It suggests its insane earnings growth is finally catching up to all the hype. You add in their unmatched data center dominance and that massive catalyst of the Blackwell GPU launch coming up, and yeah, this stock is pretty much the bedrock of the portfolio. All right, next up we've got the challenger, AMD. Now, the valuation is high, no doubt about it, but the market seems to be saying, hey, it's justified. A lot of the hype is centered on their new MI450 chip and this potential deal with OpenAI, which would be a huge validation of their tech against Nvidia. But honestly, everything hinges on their earnings call on November 4th. That's the day we need to see real, hard proof of their data center growth to support this kind of price. And then we have Palantir, the ultimate hype machine. Just look at that trailing PE ratio, 615. That's wild. The excitement for their AIP platform is completely off the charts. But here's the massive red flag. This stock is priced for absolute flawless perfection. I mean, there is zero room for error. Any tiny little miss in guidance or user growth, and this thing could fall and fall hard. And finally, we've got SoFi. For them, it is all about the big profit test. With a PE of 59, the market is basically screaming at them, prove your model works, and prove it works now. They absolutely have to show a clear path to sustained profitability, all while battling these huge headwinds from regulation and the crazy high interest rate environment. This earnings report, it is a total make-or-break moment for SoFi. So with all that in mind, the big question is, what am I actually doing about it? Let's walk through my game plan, the exact changes I've made just this week to get ready for this storm. Okay, so here are the moves. First, I added a small position in CRDO, which is a bit of a small cap AI bet. Second, I am absolutely holding my core positions in AMD and Nvidia. I really believe in their long-term story. But, and this is crucial, I've been trimming my positions in SoFi and Symbiotic. Why? To take some profit off the table and cut down my risk. And finally, I completely closed out 2 positions, BRU and SSAI, pretty much because they just didn't have any near-term catalysts coming up. This whole move is guided by a really simple principle. For me, the time to manage risk isn't when things are going south. No, It's when everything is green, when everything's looking great, that's when I take some chips off the table and lock in those profits, especially right before a super volatile period like this one. And this valuation data, it really shows you the why behind trimming those positions. Let's just walk through it real quick. Palantir at a 615x PE, that's just overheated, plain and simple. SoFi at 59x and Symbotic at 100 times forward PE, they look expensive, speculative. But in contrast, you've got Nvidia at a 33x forward PE. For a market leader like them, that seems pretty fair. And AMD, yeah, it's at a premium, but you can see a clear path for them to justify it if they execute. See? The data makes the whole decision-making process so much clearer.
Okay, so that's my portfolio, but what does this mean for you? Because the crucial point here is that this isn't just my stress test. It's a stress test for pretty much anyone invested in this space. So let's take a look at what's just around the corner.
All right, get your calendars out because here are the dates you need to circle. October 26th, that's SoFi's big profit test. Then November 3rd, we get Palantir's update on AIP and their all-important guidance. The very next day, November 4th, is AMD's moment of truth on data center revenue. And finally, on November 19th, Nvidia reports, and we'll get the outlook for Q4 and an update on Blackwell. It's just a rapid-fire series of massive market-moving events. And for my portfolio, the outcome here is just incredibly binary. It's one of two things. If all four of these companies knock it out of the park with strong earnings and guidance, the portfolio is probably going to break that six-figure mark. But if even one of them misses in a big way, you can bet I am ready to hedge my positions hard to protect these gains.
So what's your action plan through all of this? Well, first off, please don't just chase the hype. You have to look for real earnings to support these crazy stock prices. Second, if the core story still holds for leaders like AMD and Nvidia, you might want to consider using any big, unjustified dips as a potential buying opportunity. And maybe most importantly, hold some cash. Cash is king, right? It gives you flexibility and lets you act when all this volatility creates new opportunities. Ultimately, that's the key takeaway right there. You really should be treating this November like a massive stress test, not just for your portfolio, but for your entire investment thesis. It's going to reveal which of these companies have real substance and which ones were just running on pure hype. Which, leaves us with the million-dollar question, or I guess in this case, the 615 times earnings question. After everything we've just looked at, is a company like Palantir really worth that kind of valuation, especially in this environment?
I really want to know what you think. Are we just seeing a massive bubble in these AI names that's about to pop? Or is this a genuine breakout, one that's headed for new highs and is actually supported by real growth? You gotta let me know down in the comments. Bubble or breakout?